Hello, welcome to Capital Sensei. Today, we're gonna dive deep into a book that frankly rewired my brain when it comes to money, success, and the entire concept of wealth. The book is Think and Grow Rich by Napoleon Hill. We'll explore its core principles, not as some kind of mystical formula, but as a psychological blueprint for financial success. We'll translate its famous 13 steps into practical, modern-day economic and investment strategies, and look at how overcoming the fears Hill identified is crucial for building real, lasting wealth. Whenever we can, we try to answer questions left in the comments. This isn't just a channel, it's a community. So as we go through these ideas, if a question pops into your head, or if you have a personal story about how a shift in mindset changed your financial life, please share it below. Your experience might be the exact thing someone else needs to hear today. Let's get one thing straight right out of the gate. As an economist and investor, I was initially very skeptical of this book. The title itself sounds like a get-rich-quick scheme. But what I discovered inside was something far more profound. It's not about wishing for a lottery win, it's a manual on how to structure your mind to achieve extraordinary goals. The central thesis, the big idea that underpins everything else, is that thoughts are tangible things. Now, that might sound a bit abstract, so let's ground it in economics. Think of an architect. Before a skyscraper pierces the clouds, it exists only as a thought in her mind. That thought is then translated into detailed blueprints, a highly organized form of thought. Those blueprints, that tangible thought form, guide the placement of every steel beam, every pane of glass. Without the initial, focused thought, the billion-dollar structure would never exist. Your financial life works the same way. A vague desire to be rich is just a daydream. A specific, detailed plan to accumulate capital is a blueprint. The book's journey begins with the story of Edwin C. Barnes, a man who developed a burning desire to become a business associate of the great inventor Thomas Edison. He had no money. He didn't even know Edison personally. But his desire wasn't a whim. He traveled across the country, essentially as a stowaway on a freight train, and presented himself at Edison's laboratory. He didn't get a partnership on day one. He got a menial job, but he was in the orbit of his goal. This brings us to the first and perhaps most critical of Hill's 13 steps: desire. Not a wish, not a hope, a burning, all-consuming desire. In economic terms, this is what we call intense motivation or entrepreneurial drive. It's the force that makes a founder work 18-hour days or an investor spend hundreds of hours researching a single company. A mild preference for wealth won't get you through the tough times. A burning desire will. It's the fuel for the entire journey. Hill insists you must define exactly what you desire. He lays out 6 specific steps for this. 1. Fix in your mind the exact amount of money you desire. Don't say, "I want a lot of money." Say, "I will have 1 million. 200 practical step, $500,000 in my investment portfolio. 2. Determine exactly what you intend to give in return for this money. There's no such thing as something for nothing. This is a fundamental economic principle, the principle of exchange. Your contribution could be your time, your ideas, or your specialized services. 3. Establish a definite date by which you intend to possess this money. For example, by January 1st, 2034. This creates urgency and a timeline for your goals. 4. Create a definite plan for carrying out your desire, and begin at once, whether you are ready or not, to put this plan into action. This is about overcoming the inertia that paralyzes so many people. 5. Write out a clear, concise statement of the amount of money you intend to acquire. Name the time limit, State what you intend to give in return, and describe clearly the plan through which you will accumulate it. And 6, the part that many find strange at first. Read your written statement aloud, twice daily, once just before retiring at night, and once after arising in the morning. See and feel and believe yourself already in possession of the money. This 6th step leads directly into the second principle, faith. And right away, I know what you might be thinking. This sounds less like economics and more like a Sunday sermon. But hang in there with me. The faith Hill talks about isn't blind belief in the supernatural. It's faith in yourself. It's the unshakable belief in your ability to achieve the goal you've set. In investing, this is paramount. It's called conviction. When you've done your research, analyzed a stock, and believe in its long-term value, you need faith in your analysis to hold on when the market inevitably panics and the price drops 20%. Without that faith, that conviction, you'll sell at the bottom every single time, locking in your losses. Faith is the antidote to fear-based decision-making, which is the #1 destroyer of wealth for the average investor. So how do you develop this faith? That's where the third principle comes in, auto-suggestion. This is the mechanism for influencing your subconscious mind. It's the how behind reading your goals aloud twice a day. Think of your conscious mind as the captain of a ship. It can steer and give orders. Your subconscious mind is the engine room. It doesn't question the orders. It just provides the power to carry them out. Auto-suggestion is the process of repeatedly sending orders from the captain to the engine room. When you constantly tell yourself, with feeling and emotion, that you will achieve your specific financial goal, you are programming your subconscious. In behavioral economics, we see this work all the time. If you set up an automatic transfer from your paycheck to your investment account, you are using a system of auto-suggestion. You're telling your brain, saving and investing is a non-negotiable, automatic part of my life. You're building a habit that runs on autopilot. Now, desire, faith, and auto-suggestion are the psychological engine. But an engine needs a vehicle to go anywhere. That vehicle is the fourth principle, specialized knowledge. Hill is ruthless on this point. He states that general knowledge, no matter how great in quantity or variety, is of little use in the accumulation of money. The world doesn't pay you for what you know. It pays you for what you do with what you know. Think about it this way. A person with a general knowledge of medicine might be able to tell you that your head hurts. A neurosurgeon with highly specialized knowledge can perform a delicate operation to remove a brain tumor. The economic value of their knowledge is worlds apart. In your own career or business, what is your specialized knowledge? Are you an expert in digital marketing for dentists? A master of logistics for e-commerce? A software developer who specializes in financial technology security? That specialization is your economic leverage. If you don't have one, your first investment should be in yourself to acquire it. Once you have specialized knowledge, you need to apply it. This requires the fifth principle, imagination. Hill splits this into two types, synthetic imagination and creative imagination. Synthetic imagination works with existing concepts, ideas, and plans, rearranging them into new combinations. Most successful investing and business is synthetic imagination. You take proven models like diversification, value investing, or subscription services, and you apply them to your specific situation. Creative imagination is rarer. This is where new ideas are born. It's the aha moment that creates something from nothing. This is what led to the invention of the index fund, the smartphone, or blockchain technology. For most of us, mastering synthetic imagination is the key. It's about looking at all the pieces on the board, your skills, your capital, the market opportunities, and arranging them into a winning strategy. It's your financial game plan. A plan, however brilliant, is useless without execution. This brings us to the sixth and intensely practical principle: organized planning. This is where the rubber meets the road. Your desire has to be crystallized into a definite, workable plan. Hill recommends forming a mastermind alliance, which we'll discuss later, to help you create and execute this plan. Your plan should be thorough. If your goal is to build a successful online business, your plan needs to cover product, marketing, logistics, and finance. From an investor's perspective, this is your investment policy statement. It's the document that outlines your financial goals, your risk tolerance, your time horizon, and the specific asset allocation you'll use to get there. For example, I will invest 60% in a low-cost global stock index fund, 30% in real estate investment trusts, and 10% in government bonds, rebalancing annually. That is an organized plan. Without it, you're just gambling. When the market goes crazy, you refer back to your plan, not your emotions. Even with the best plan in the world, nothing happens until you start. This leads to the seventh principle: decision. Hill calls indecision and procrastination the twin enemies of success. In the world of economics, this is known as opportunity cost. The time you spend dithering, waiting for the perfect moment to invest, or the perfect business idea to strike, is time your money is not compounding. It's time a competitor is capturing market share. A decision made promptly, even if it's not perfect, is often vastly superior to endlessly waiting for perfection. If your analysis shows a company is a good long-term buy, you act. If you wait for it to drop another 2%, you might miss a 20% rally. Successful people, Hill observed, make decisions very quickly and change them very slowly. Unsuccessful people make decisions very slowly and change them frequently and quickly. This is a perfect description of a disciplined investor versus a panicked amateur. So you've made your decision and put your plan into action. Now comes the grind. This is the eighth principle: persistence. This might be the least glamorous principle, but it's the one that separates the dreamers from the achievers. Persistence is the sustaining power that keeps you going when everything seems to be failing. It's applying your will to your desire, day in and day out. The most powerful force in investing is compound interest, which Einstein supposedly called the eighth wonder of the world. But compounding only works its magic over long periods of consistent investment. It requires persistence. You have to keep investing through bull markets and bear markets. It's like a stonecutter hammering away at a rock. The first 99 blows might not show a single crack, but the 100th blow splits it in two. It wasn't the last blow that did it, but all that had gone before. Persistence is your 99 blows. Now at this point, you might be thinking this all sounds like a very solitary journey. But Hill introduces a concept that is a cornerstone of modern business and economics. The ninth principle: the power of the mastermind. He defines a mastermind as the coordination of knowledge and effort in a spirit of harmony between two or more people for the attainment of a definite purpose. Put simply, you cannot do it all alone. In economics, we call this synergy. When different skills and perspectives combine, the result is greater than the sum of its parts. Think of the founding of any great company. Steve Jobs had the vision and marketing genius, but he needed Steve Wozniak's engineering brilliance to build the first Apple computer. They formed a mastermind. For you, this could be a group of trusted advisors, a financial planner, an accountant, a mentor. It could be a study group of fellow investors where you share research and challenge each other's assumptions. Wealth is rarely created in a vacuum. The 10th principle is one that often makes modern readers raise an eyebrow: the mystery of sex transmutation. Let's be very clear about how to interpret this in a modern context. Hill is not talking about the physical act itself. He's talking about the powerful emotional energy behind it, the passion, the creativity, the enthusiasm. He argues that this is one of the most powerful human drives, and that successful people learn to transmute or channel this energy from purely physical expression into their work and creative pursuits. Think of the most charismatic and successful leaders or artists you know. They have an energy, a magnetism, a passion that is palpable. That is the kind of energy Hill is describing. It's the drive that fuels late nights, building a prototype, or the passion that convinces investors to back your vision. It's about harnessing your most powerful emotional forces and directing them, with intention, toward your definite chief aim. It's not about suppression, it's about redirection. As you consistently apply these principles, you are shaping the most powerful asset you have. This is the 11th principle, the subconscious mind. We touched on this with autosuggestion, but it deserves its own focus. Your subconscious is like the fertile soil of a garden. Your habitual thoughts are the seeds. If you consistently plant thoughts of poverty, fear, and doubt, that is the harvest you will reap. If you consciously and persistently plant the seeds of your definite purpose, backed by faith and emotion, your subconscious mind will begin to work on the problem 24/7. It will make connections you're not aware of. It will present solutions in flashes of insight. It's why you sometimes wake up in the morning with the answer to a problem you were struggling with the day before. By intentionally programming your subconscious, you turn it into a powerful, silent partner in your quest for wealth. The next principle is the brain, which Hill describes as a broadcasting and receiving station for thought. In today's terms, we can think of this as staying informed, being open to new information, and developing your ability to recognize patterns. Your brain is the hardware that runs the software of your mind. To be a successful investor or entrepreneur, you must constantly feed your brain high-quality data. This means reading annual reports, studying economic trends, understanding new technologies, and learning from the successes and failures of others. Your brain, when tuned by your definite purpose, starts to filter the noise. It begins to receive signals, spotting an undervalued asset class, recognizing a shift in consumer behavior, or seeing an opportunity that others miss. It's not magic. It's a well-trained brain doing what it's designed to do. Finally, we arrive at the 13th principle, the pinnacle of the philosophy, the sixth sense. This is another one that can sound a bit woo-woo, but let's break it down. Hill describes the sixth sense as creative imagination, or intuition. He says it can only be developed and accessed after you have mastered all the other 12 principles. In the real world, we call this expert intuition. It's that gut feeling a veteran investor gets about a deal, or the instinct a seasoned chief executive officer has about a new market. This isn't a mystical power. It's the result of your subconscious mind processing thousands of hours of experience, knowledge, and data in an instant and delivering a conclusion to your conscious mind as a hunch. It's pattern recognition that happens so fast, it feels like magic. You can't start with the sixth sense. It is the reward you earn for mastering the other principles. Now, building this entire mental structure for success is one half of the equation. The other half is demolition. You have to tear down the mental structures that are holding you back. Hill identifies what he calls the 6 ghosts of fear that we must conquer. These are the psychological barriers that prevent most people from ever getting started. The first, and most pervasive, is the fear of poverty. This doesn't just mean fear of being destitute. It manifests as a general anxiety around money, a scarcity mindset. In investing, it leads to being overly risk-averse. People terrified of poverty will keep their life savings in a bank account, where inflation silently erodes its value year after year. They are so afraid of losing $1 that they miss out on the opportunity to gain 10. Conquering this fear means understanding and managing risk, not avoiding it entirely. The second is the fear of criticism. How many brilliant business ideas have died because someone was afraid of what their friends, family, or spouse would say? You're quitting your stable job for that? This fear keeps people in jobs they hate and prevents them from taking calculated risks. To build wealth, you must develop a thick skin. You must have more faith in your own organized plan than you have fear of other people's opinions. The third is the fear of ill health. This can manifest as hypochondria, but in a financial context, it often leads to a mindset of playing it safe to an extreme degree. People become so focused on preservation that they forget about growth. They worry incessantly about future medical bills, which is prudent, but they allow that worry to paralyze them from making the very investments that could easily cover those future costs. It's a self-fulfilling prophecy of limitation. The fourth ghost is the fear of the loss of love of someone. This can cause people to make terrible financial decisions to please a partner or avoid pursuing an ambitious goal for fear it will disrupt a relationship. Financial compatibility and shared goals are critical in a partnership. Allowing this fear to dictate your financial strategy is a recipe for resentment and failure. The fifth is the fear of old age. This is the fear of becoming useless, of being left behind. It can lead to a belief that it's too late to start investing, too late to start a business, or too late to learn a new skill. The truth is, with increasing lifespans, starting to invest seriously at 40 or even 50 can still lead to a very comfortable retirement. This fear is a lie that robs you of your most productive decades. And finally, the sixth ghost, the fear of death. This ultimate fear can create a sense of futility. Why bother building all this wealth if I'm just going to die anyway? This is a philosophical question, but in a practical sense, it can lead to a lack of long-term planning. Conquering this fear means shifting your focus to building a legacy, providing for future generations, or funding philanthropic causes that will outlive you. It transforms wealth from a personal possession into a tool for lasting impact. So when you put it all together, what do we have? Think and Grow Rich is not a book of magic spells. It's a rigorous system of psychological conditioning based on empirical observation of the most successful people of an era. It teaches you to first build a powerful, focused, and persistent mental engine fueled by desire and faith. Then, it gives you the chassis and the wheels, specialized knowledge, imagination, and organized planning. It tells you to hit the gas with a firm decision and keep your foot down with persistence. It advises you to build a team with a mastermind alliance and to channel your deepest energies into your work. And all the while, it instructs you to continuously upgrade your mental software through your subconscious mind and brain until you develop the expert intuition of a master. From an economist's point of view, this book is a masterclass in the importance of human capital. Not just your skills, but your mindset, your discipline, and your psychological resilience. It correctly identifies that the biggest obstacles to wealth are not external economic conditions, but internal mental barriers. The stock market will go up and down, recessions will come and go, but the person with a mind conditioned for success will navigate those challenges and find opportunities, while the person ruled by fear will be a victim of circumstance. This book truly changed how I think about money because it shifted my focus from the purely technical, the spreadsheets, the market analysis, the economic data, to the psychological foundation that must exist first. The best investment strategy in the world is useless if you're too afraid to implement it, or if you lack the persistence to stick with it. Thinking is the cause. Growing rich is the effect. The quality of your thinking, planning, and persistence directly determines the magnitude of your financial results. It's the ultimate lesson in personal accountability.